Hello traders and welcome to another video review. Today is Tuesday, the last day of the October 2023. Let's take a look at the Forex economic calendar. It looks like our calendar today is busy with plenty of the data release. We start with Japan. Jobs application ratio just in line with the previous reading and worse than the forecast. Industrial production worse than the forecast, but better than the previous reading, and retail sales just below the forecast of 5.9% with the actual reading of 5.8%, which is still worse than the previous reading. Private sector credit from the Australia increases to 0.5%, and there are there's very important bunch of data from China. Manufacturing PMI is worse than expected, 49.5, which is under the level of 50, under the 50.2, and below the previous reading of 50.2 as well. Bank of Japan interest rate, the decision shows that the Bank of Japan left the interest rate at the level of minus 0.1. Outlook report and the press conference has been done already. In the meantime, we got the release of the nationwide HPI from the UK, French GDP, which is in line with the expectations, 0.1%, and it's shrinking. And of course, we got data from the German retail sales minus 0.8%, which is way worse than the forecast of 0.5% and below the previous reading. The same situation, maybe a little bit better, is from the Switzerland retail sales minus 0.6%. We are still waiting for French CPI and French HICP, Polish CPI, Italian CPI, and the whole CPI from the Eurozone, which is scheduled for release at 11 o'clock, and the whole Eurozone GDP, which is scheduled for release at 11 o'clock as well. CPI is expected to drop from 4.3% to 3.1%, and the GDP for the third quarter is supposed to decrease from 0.1% to 0%. So during the London session, New York session, so this in between time, we still have the German Buba Wurmeling to give a speech at noon. Then we have the unemployment rate from Brazil and the GDP from the Mexico. Then at 1:30 we got the GDP from the Canada. And then we are narrowing down towards the very important data for today. First, we have the HPI composite and Chicago PMI data scheduled from the US, scheduled for release at 2 o'clock and quarter to 3 o'clock. And then at 3 o'clock, consumer confidence data are expected to be released. The market participants expect a drop from 103 to 100 points. Then again, we will have some speeches from German Buba Nagel at 5 o'clock. The Guindos will give a speech at 30 minutes later. Then we have the Reserve Bank of New Zealand Financial Stability Report at 9 o'clock, and then employment change, unemployment rate, AIG manufacturing index, this is from the Australia, and then Reserve Bank of New Zealand Governor will give a speech at 11 o'clock. In the meantime, we got of course the release of the API weekly crude oil stock at this is 9:30 apparently. So plenty of the data in the last day of the October are scheduled for release. Some of them are very important, most of them are important. They got two yellow dots. So let's just start with the data. Let's start with the technical part of our review, and I think the euro dollar would be good to take a look, and then maybe New Zealand dollar, and of course US dollar to the Japanese yen. So euro dollar, as you can see on the 4-hour chart, is approaching yesterday's high. Yesterday's high is located at 1.0626. If we break above this level, then we will hit the technical resistance located at 1.0640, and then even there's possibility of the extension towards 1.0695. The market keeps bouncing from this short-term trend line support and is trading above the 50 and 100 periods moving average with positive and strong momentum of 61 points. So it looks like today we will have some kind of a rally on the euro dollar. So that's very short analysis of the euro dollar. What is going on the US dollar to the Japanese yen is very interesting, because what we see is kind of a nice rebound to the upside towards 150.79. This is the swing high and of course the technical resistance right now. We got the support located here at 148.82, so it's exactly where the previous big pin bar low was made. So if we just take a look at this part of the chart, of course there is a in the back there is a uptrend, so the uptrend is still being continued. Very nice movement to the to the downside has happened. So price range, if we take our price range tool, we can see that this was at least a few percent, I guess, yes, 1.31%, not that much. So after 1.31% correction, we are now doing the let's say V-shaped reversal or the uptrend, let's say resumption. Of course, we hit the extremely oversold market conditions when we hit the level of 148.81, and now there is a sharp increase in the momentum to the upside. So I think that this high here, 150.79, will be challenged, maybe even today, because it looks like the bulls are now temporarily in charge of the market and they might resume the uptrend. Of course, the full resumption comes with the last swing high located at 150.79 is clearly violated. Please notice that we should as well take a look at the monthly candle, because today is the last day of the October, and monthly, as you can see, we are trading above 150 months average. And there's very interesting situation here, because it looks like we will have the monthly another monthly green candle, basically. So the uptrend from that January 2023, which is the low here located at the level of 127.23, is the last low this year. And maybe, just maybe, 151.96, the high from the October 22 is next level to be tested soon. Maybe not this month, but maybe this week. So there is definitely strong uptrend here. There's definitely situation when we can expect a very nice monthly close here on the US dollar to Japanese yen. Now we got some data from the New Zealand, so let me take a look at the New Zealand dollar. Okay, let's start with the monthly candle. And the monthly speaking, as you can see, since 2014, multi-year downtrend is being made. We got the double top here. That's the swing low. That's the lower lower low, lower high, lower low, lower high. Almost equal lower low, lower high, and now we are pushing even lower here on the monthly chart of the New Zealand dollar to the US dollar. Very clear rejection of the level of 0.65, then big pin bars here, big pin bars here, big pin bar here, 3 months of the long upper wick, and we reversed lower. So we are trading below 50 periods moving average and 100 periods moving average. Of course, this is monthly, during the negative and weak momentum. So the next target, monthly speaking, is 0.5507. How does it look like on the 4-hour chart? As you can see, the local low was made at basically 5,768 pips. Then we bounced towards 5,839, and the local high was made at 5,839. So that's the local high. Nevertheless, we need more than this in order to move higher. So as you can see, the bank of the New Zealand bank didn't actually help. Local high 5,842. That's the local high, but it might be changed very quickly. Technical support 5,811, and of course 5,795. 9. So what do we see here is 5,768. This is the last swing low and the technical support. So as long as we trade above the 50 periods moving average and above this 5,768 swing low, the outlook remains slightly bullish, targeting the last highs located at 5,867, just below the 100 periods moving average. So the New Zealand dollar outlook remains rather positive as well. What's the outlook for the Australian dollar then? And as you can see, let's start with the big time frame, like a monthly. And on the monthly time frame, you can clearly see the downtrend continues. We are approaching the key technical support and the swing low from the October 22, 6,176. We are not that far away whatsoever, 6,166. So as you can see, this is kind of a range trading with occasional lower low. So what we got here is that level, which is the technical support at 6,273 pips, and of course we got the technical resistance. Resistance is located at 6,402. So even if we try to move higher, then we need to break above this level and even above 6,396, which is just a few pips away from this high. Now the local levels, intraday levels, are 6,387. This is the technical resistance, local technical resistance. Okay, I'm not quite sure if I will be able to move this one. Okay, so maybe let me just take this one, and I got the intraday technical support. This one is from the Friday, 6,336. So basically the bulls tried to move higher, but no new swing high was made, and we just went towards the level of 6,387. Then there's a reversal, and immediately during the reversal the market hits the level of 50, the neutral level. So any new low below the 6,344 would likely extend the drop in momentum even lower and make the level of 6,335 next for a test. Any breakout is of course negative, but as you can see, for a few days this market has been moving up and down in relatively tight range. So no trend is right now being spotted on the Australian dollar market, and it looks like this market is continuing the whipsaw trading mode. Please notice the fact, again, on every market today we have the monthly close, so please keep an eye on the monthly candle close for today on any market you trade or analyze. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.